Marilyn, let's just start with today and the Federal Reserve Chairman, something we've mentioned through the morning, how difficult it will be to communicate that the decision ultimately on QE is divorced from a decision on rates, doesn't set the clock ticking, when the dot plot's going to be in the mix as well.
Yeah, I think already they've done a relatively good job of trying to decouple tapering QE with a rise in interest rates. I think they've been trying to signal that, and I think they have done a relatively good job. I think going into today, the market is expecting to maybe hear a little bit more around tapering, but they're not expecting too much. Maybe something will change in the forward guidance about substantial further progress being made. And the market, I think, is the consensus is that tapering will start at some point before the end of this year. In terms of the dots, that is something that I think most market participants will be keeping a very, very keen eye on, particularly as we see, maybe an adjustment to 2022. It's hard to see, but we'll also get the nuance for 2024. And at the moment, it probably looks like the Fed will still probably be suggesting in the dot plots that you maybe have 3 rate hikes in 2023 and 3 in 2024. But right. I think they've so far done a pretty good job of keeping tapering QE and a change in interest rates pretty well separated.
Marilyn, you do a world-class job of synthesizing all that you read in fixed income dynamics. What do you anticipate the real yield will do?
Well, so it's interesting. If you look at the behavior of the US real yield versus European rates, or you actually see that in relative terms, actually it takes a little bit higher. And I think if you do start to see, it depends the messaging taking away from this meeting, and if we do get further guidance on tapering towards the end of the year, maybe the dots as well. If it's perceived to be a bit more dovish, then I do think you'll start to see you'll start to see the dollar tick down, and you'll see an impact on real yields as well. But at the moment, I think we would expect to see real yields continue to basically tick up a little bit more. If we do get the Fed, signaling that they are going to continue with the framework of tapering before the end of this year, and also the pace will be important as well.
I doubt, Marilyn, that the debt ceiling in today's decision is going to have any real bearing for the Fed, but for the bond market, is there a real fear there around the potential of that suspension not being extended?
Well, I think it's definitely another layer of uncertainty to add to the mix, and it's certainly another risk. I think, not to be fully discounting it, because it is a risk that is still there. But, on the base scenario, it is that something will be agreed. But I think if you add that to COVID, you add it to the news around growth generally in China and elsewhere as well. It's just another factor that I think will maybe contribute a little bit more to the ongoing volatility that we're seeing at the moment, perhaps more in the equity market than actually in the fixed income market at the moment. But as you say, I think it is definitely a risk, and I think it is to a certain extent being priced in. But at the moment, I think the general consensus is that there will be some sort of agreement, but we'll see.